Welcome back to the News Hub. I'm Simon Constable. China's economy grew at a subdued rate, according to new data, but it was still better than some had expected. What does it mean to the world economy, and are the figures more aspirational than actual? To help us analyze, we have Silvercrest Asset Management Chief Strategist Patrick Chauvenet joining us on the set. Thank you very much for being here, sir.
Good to be with you.
So before we get to whether the numbers are aspirational or not, let's talk about what numbers we did get. 7.4% growth is the latest figure. From a U.S. perspective, that would seem very good.
Well, look, I think what's more important than the actual number itself is people's response to that number. The conventional market view is that if you get a higher than expected number, it's good. If you get a lower than expected number, it's bad. But I don't think that applies to China right now. China's been pumping up its GDP in ways that are unhealthy, unsustainable. And there's a widespread recognition, including among China's leaders, that it needs to engage in reforms that are actually going to slow growth.
And these will be market-based reforms where they don't build cities that are completely empty just to keep people busy. They don't keep the shipyards working to produce ships that no one wants to buy. That's the general feeling, right?
Exactly. And I think that based on that, we really should only expect growth to slow further. There was a disappointment last night that instead of growing at 18% year on year, fixed asset investment only grew by 17.6%.
Now we say fixed asset, but that's factories and construction,
building out capacity,
and roads and
right. That's building out capacity. But people should step back and say, the government admits that there's huge overcapacity in a whole number of industries, and we've seen the ghost cities. So why should China be investing 17 or 18% more than it did last year when it actually needs to be reining in investment?
Now, it's a very important economy because it's the second largest economy in the world. It produces more steel than anyone else, and steel is a very important for manufacturing. How does that all affect us here in the U.S.? I mean, U.S. still the biggest economy in the world by far.
Right. Look, it's the second largest economy in the world. It has a huge impact on commodity prices. Just to kind of boil this down to something concrete, yesterday there was a big sell-off in gold because there was concern that a slowing Chinese economy would mean slower Chinese demand for gold. Ironically, I think that is not correct. There are a lot of misconceptions about what a slowing Chinese economy means. People in China don't buy less gold when they're nervous about the economy. They actually go out and buy more gold. We've seen the Chinese buying real estate in places like New York and in London. If the Chinese economy slows, I think you'll see those trends intensify, not go away.
Because the banking system's a little bit shaky there, to say the least. Let's have a quick look at the markets, see how they're doing. This is the Asian markets out there. The Nikkei up 3%, which is really quite a phenomenal move, although it has come off of some losses there. The Hang Seng, the Shanghai, not really a huge amount up, but really not quite the crushing blow. Now, let's get to this important thing about the data, right? The data, aspirational or actual? I've heard that it's sort of aspirational. It's not like US data. US data has its problems, of course.
A black box, because we don't really know how they arrive at how they go from nominal GDP to real GDP, how they make that calculation.
Which is the difference between the price level moving it's inflation adjusted, broadly speaking.
And just reconciling it with the numbers in the actual economy. So they come up with a real GDP number and you don't quite know where it came from. The other thing is that most countries measure their GDP based on quarter. If you use the quarter number that China actually puts out in a kind of tucked away, first quarter growth was actually 5.7%.
Wow. Okay.
So, how do you reconcile that with a 7.4% number?
You'll be busy today reconciling that, how you actually get there. Patrick Chauvenet, we appreciate your time, sir.